Hello and welcome to the Australian Bitcoin podcast. My name is Alex. Today with me is Pat. We've got about a dozen of the biggest stories from just the last 2 weeks. Brought to you by Australia's oldest Bitcoin-only exchange, hubblock.com.au. We do try to follow a fortnightly schedule, but things do sometimes pop up. Please bear with us on that. Also, we want these recaps to be Orange Pill friendly, so feel free to send them to your friends and family. And for the more experienced Bitcoiners, we hope you get something out of it too. And thanks for your patience. Let's get cracking into the news. Pat.
All right, let's kick off with the price recap as usual. Actually, there was some news earlier in August. The stock market tanked. The US stock market alone saw losses of over 880 billion or Australian dollars, 1.32 trillion. Bitcoin saw a dip of almost 4.5% because, it gets caught up in everything, it turns out. And it was influenced by the unwinding of a Japanese yen carry trade, where the Japanese yen's rising value eroded profits in other areas, causing a rush to the exits.
Got a lot of market action this month. This Japanese yen carry trade is quite a significant one. We've seen sort of a rebound in prices already, but it's not something that unwinds overnight. This has been quite a substantial trade that's been going on. Essentially, it is a form of speculative attack on the Japanese yen that's been going on, where traders would essentially take loans or take out leverage in the weak currency, which was the Japanese yen, for a range of reasons, and then sell that on the market, forex markets, foreign exchange currency markets, for US dollars or another strong currency. I think the Australian dollar was actually used fairly frequently for the carry trade as well. And then wait for the Japanese yen to decline because of the Japanese situation, and then wind up that loan. So what we've actually seen is that because the Japanese central bank decided to hike rates, that trade no longer became profitable. And so a whole bunch of traders tried to wind up that trade all at once.
Bitcoin dropped down to a low of 61.77 thousand Australian dollars, but recovered back up to 91,000. All the Bitcoiners are still here buying even at what looks like the market top. And in terms of Bitcoin mining, the key metric determining miners' profits, hash price, which is your total daily revenue earned divided by your total hash power, has reached a new historical all-time low at 3.3 US cents per terahash. So, for example, a mid-range mining machine of 100 terahash, you would have earned around $3.30 US in Bitcoin that day, give or take a few factors. And today it's back up to 4.5 cents per terahash. So it's interesting, the newer machines are more efficient in terms of their energy usage, meaning hash price should be rising. But so many people are starting to mine Bitcoin that the hash price has actually been in a steady decline since 2011.
We know that the halving is a big event for the miners, and they were thrown a bit of a lifeline by all the spam on chain, the ordinals and inscriptions, and particularly the runes. But that's sort of come to an end now, and the miners have been slowly bleeding out. We saw some hostile takeovers we discussed a few months ago. We've seen a bit of drama in the mining space. The consolidation is probably taking place, and this is the period where we start to see move into the next phase with Bitcoin. So good to see.
Over in the ETFs, really quickly, some weak hands were selling earlier this month, but on August 8th, we saw a net inflow of almost 200 million US dollars. So there's still a lot of interest there.
First news item is the Dark Skippy exploit, which was disclosed publicly just over a week ago. I was actually part of this disclosure. I got to help with the demo earlier in the year. So it's quite interesting to see from the inside. So the Dark Skippy attack is a newly identified attack, or actually it's made an old attack a lot more dangerous. And the way that it works is it targets Bitcoin signing devices, particularly air-gapped style hardware wallets. And the attack exploits vulnerabilities in the firmware of signing devices, whereby if you have malicious code, that's, your hardware device is running code that's been developed by an attacker, then your device is able to exfiltrate the master secret key, so your seed words, and it does that by embedding them into your transaction signatures. Essentially, if a device is compromised with malicious firmware, it can covertly and efficiently leak your secret keys without your knowledge. One of the really notable aspects of it is because it's being done and disguised in a normal Bitcoin transaction, it's completely covert, like it's stealthy. It doesn't require any additional communication channels. It's using the Bitcoin network itself to propagate, and it's executed, and it can be executed in a single transaction with as little as 2 inputs, making it very hard to detect during the time, and even afterwards if you've been attacked and you've lost your funds. It's very difficult to identify how it occurred. So to counter the threat, a few mitigation strategies have been proposed. Some of the existing mitigation strategies that are in place in several devices are things like using secure boot and vendor-signed firmware. So the developer of the firmware for hardware devices will sign it, which at least gives you that kind of guarantee that it's the firmware that they develop, so you're not exposed to a man-in-the-middle attack. Some more protocol-based mitigations have been proposed. And one of the things that sort of a lot of the hardware manufacturers have been waiting on is to have the partially signed Bitcoin transaction format, seeing that expanded to include and support anti-exfil. So that's sort of something that's underway at the moment. But once that comes through, then that'll definitely complicate an attacker's ability to manipulate with what's called the nonce, which is part of the digital signature, and that'll help to protect from these kinds of attacks. And there you'll be able to see an in-depth explanation. You'll be able to see a cool little video that's been put together by Nick and the rest of the team. You might be wondering, how do I protect myself against Dark Skippy and other attacks of this nature? Well, it's actually reasonably simple for now. In the future, we'll have Frost-based protocol, next-generation multi-sig style devices, which will be much more effective. But for now, the best thing you can do is when you receive a device, when you buy a new hardware wallet, verify that firmware. So check the signature. If you don't know how to do that, that's fine. You can look up guides for how to verify firmware signatures, and Sparrow Wallet has a nice graphical interface that allows you to do it, and it's quite simple to do. So firstly, verify your firmware. Secondly, make sure that you protect that hardware wallet. So you need to think about your hardware wallet as being as important as your private keys yourself. If you wouldn't leave your private keys lying around, or you wouldn't give your private keys to your friends, then definitely don't do that with your hardware wallet. So don't leave your hardware wallet out. Don't share your hardware wallet with other people. And then finally, if you've got a large amount to protect and you're really worried about this kind of thing, then consider using a multi-vendor, multi-signature solution, because that means that a threshold of devices needs to be compromised instead of just a single one.
A great wake-up call for everybody who is not verifying their software. Be careful out there. And also, for anybody who's not sure what verifying a signature really is, essentially it uses a checksum, which is a check against the original software. So the original software has a file size, and the checksum will be the precise number of bits that are in that software. And if it doesn't match up, then it means that there was some alteration made to the software, and you'll have to re-download from the original source. Okay, over to our next news story. Donald Trump's election promises don't even mention Bitcoin. He's made something like 24 different promises here, and I won't read all of them out, but it's things like begin the largest deportation operation in American history, terminate the open border policy, more fracking, an end to inflation, terminating the new green scam, massive tax cuts, revoking China's most favored nation status. It goes on and on. He wants to also prevent World War III, which is pretty ambitious, but no mention of Bitcoin at all. It seems that he was content with his speech he made at Nashville, which did get quite a good reception at the time. And yeah, a bit upsetting to see that he's not making an official promise to the Bitcoin industry after all that big talk he made before. Do you have any comments on this one?
Yeah, I think the fact that he addressed the Bitcoin conference, it's like a pretty clear indication of where he stands. He's making it sort of part of his platform that he is going to at least be a lot more receptive and open to Bitcoin and obviously the crypto industry, considering there's probably a lot of crypto money that got him there in the first place. And we know that he's done his own, I don't know if he's launched his own token, but he's definitely done NFTs. So look, it was always going to be like this. And I guess what we're hoping for out of the political realm is firstly try and do no harm. So if he ends the sort of persecution of Bitcoin and crypto that we're seeing at the moment, that'd be good in and of itself. And if there's supportive policies, then it only gets better. Jumping on to our next news item, a Nigerian Bitcoiner is suing his government. James Otudor, apologies for the pronunciation, a Nigerian Bitcoin advocate and politician, has launched a legal battle against the Nigerian government and its regulatory bodies, including the presidency, finance minister, attorney general, and the Central Bank of Nigeria. Right, so it's definitely going to go well for him. Otudor's action calls for a clear and supportive regulatory framework for digital assets within Nigeria. He argues that the existing restrictions infringe on fundamental human rights by limiting the ability of Nigerians to protect their savings against inflation and conduct international transactions, especially amidst the Naira's devaluation and foreign exchange shortages. Otudor has garnered considerable local support, reflecting broader community interest in the benefits of digital assets. The Nigerian Securities and Exchange Commission approach is said to focus on investor protection and market integrity. We all know what that means, while stressing the importance of public education.
Actually, in further Nigerian news, the Nigerian government freezes $37 million of USDT belonging to #EndBadGovernance protesters. So this time, the Economic and Financial Crimes Commission in Nigeria say the assets were linked to money laundering and terrorism financing. They're targeting multiple wallet addresses amidst a crackdown on protest participants accused of various crimes during the nationwide demonstrations against economic hardship and governance issues. The government's actions, including the freezing of these assets, have been controversial, and they echo similar measures taken during the 2020 #EndSARS protests.
Nigeria in particular has quite a high rate of Bitcoin adoption and quite a large population, so they're really anchoring Africa in terms of Bitcoin adoption and Bitcoin technology development.
Further international news, Norway is considering regulations on crypto mining without any public consultation. The Norwegian parliament is considering proposals to regulate data centers, and they want to balance the needs of critical infrastructure and power resources, reflecting concerns about environmental impact and energy consumption. Various political parties within the committee have differing views. The majority, including the Liberal Party, support restrictive measures due to its high energy consumption and limited economic contribution to Norway, which is just clear that they don't quite understand what's going on. Conversely, parties like the Conservative and Progress Party emphasize the importance of data centers to the Norwegian economy and are wary that measures could hinder growth, such as additional taxes on data storage. Actually, the nation is trying to avoid potential energy shortages. It's expected that Norway will face a power deficit by 2030.
Yeah, interesting. I think one of the critical things to communicate, obviously, is what is the use case and value for Bitcoin. If you don't understand why Bitcoin itself has value, as in Bitcoin the asset, then expanding energy and resources on supporting the Bitcoin network, it will always appear like a waste. So that should always be the first protocol if you're trying to deal with the regulators. It's then they need to understand why Bitcoin itself has value before they'll ever have any chance of comprehending why they shouldn't be cracking down on Bitcoin mining, which they'll probably otherwise see as wasteful. So we've got Qatar set to legalise digital assets by 2024. So Qatar is set to enact a comprehensive digital assets framework by the end of this year. This initiative has been led by the Qatar Financial Centre and aims to sort of formalise the legal and regulatory environment for digital assets, including the tokenization of securities, investment instruments, and other asset classes. Actually, I don't know if that is boo. There's a case for tokenization of securities. It's just so tightly associated with scams that it's not funny. So the Qatar Financial Centre has been proactive, soliciting feedback from industry stakeholders to refine the framework. The framework includes provisions for ownership, custody arrangements, and trading of digital assets. They're planning a phased-in approach with the initial legislation focusing on tokenization and then detailed regulations for specific activities and products to follow. Additionally, the launch of the Digital Assets Lab serves as a collaborative space for startups, so they got a startup hub, and researchers to develop and test new digital finance solutions.
The United Nations Cybercrime Draft Convention passes a vote unanimously. Nobody's really surprised, but its first cybercrime treaty recently, introducing extensive surveillance and data sharing provisions between the states. The treaty aims to regulate various cybercrimes, including unauthorized access to information systems and the misuse of digital devices, among other things. There was some opposition concerned over privacy, of course, and the potential for government overreach, but their voices weren't loud enough, or maybe they just did not really even consider them. So the treaty mandates UN member states legislate against these cybercrimes, including measures for real-time data collection and the sharing of financial information to combat money laundering. Critics are arguing that the treaty excessively expands government surveillance and mandates widespread personal data sharing, which could impinge on individual freedoms and privacy. The agreement is set to undergo a final vote in the General Assembly and requires ratification from 40 nations to become effective. The voting will take place later this year, where it's expected to pass.
Further news, Russia and Venezuela have moved to block Signal Messenger. Russia cited the prevention of the app's use for terrorist and extremist purposes as the reason for the block, and according to statements from the country's telecommunications watchdog. In Venezuela, the block has followed disputed presidential election results. Signal has acknowledged that some countries block its services and has recommended that users activate a built-in feature to circumvent censorship. So in some sense, it's always good to see this because it's a bit of an endorsement that the app actually works. Why would Russia and Venezuela be blocking this app if there was backdoored and they had access to it? Now, it doesn't mean it's definitely not backdoored. Like potentially other intelligence services do have it, but it's in my mind a good endorsement of Signal. The reason that Venezuela is moving to block Signal messaging at the moment is that there's still ongoing protests throughout the country after the election result was disputed. So Maduro is seeking to remain in power. Meanwhile, the opposition is basically organizing, the political opposition in the country is organizing mass protests.
Time to jump on Nostr.
Yeah, possibly, yeah. Although Nostr is not great for encrypted communications. DMs, I believe, are encrypted now for a lot of those. Optionally, they can be encrypted, but a lot of metadata leaks about them. So Nostr is not great at the moment to use for private messaging. Great replacement for Twitter, and maybe we'll get there in the future, some kind of pairing between the Nostr protocol and like an encrypted messaging protocol, but not at the moment.
Moving on, BlackRock takes over as the largest digital asset fund manager, surpassing Grayscale. So BlackRock, you've probably heard of them, now hold over $22 billion US dollars or 33 billion Australian dollars in digital assets. Some are worried about decentralization, and it's only the early days of these ETFs. They're still quite new. As of August 16th, the battle between the Bitcoin ETFs is still very narrow, with BlackRock's ETF at 17.2 billion US dollars, a little over 25 billion Australian dollars, which is not far behind the oldest Bitcoin ETF, GBTC from Grayscale, which is at 18.7 billion US dollars or 28 billion Australian dollars. Although the ETFs just paper Bitcoin essentially, it's interesting to see these numbers and see how much is flowing in and also flowing out at the same time.
Yeah. And while we say that the GBTC or Grayscale Bitcoin Trust is the oldest ETF, all the ETFs were launched at the same time. It's just that the Grayscale, the actual trust holding element which is GBTC, they were active for many years prior to the ETFs, and they converted the trust into an ETF. So they launched with a large amount of Bitcoin. And what's keeping the Bitcoin there now is to take it out of the trust would trigger a capital gains event for them. So despite, I guess, what's historically been quite a lot of poor behavior from GBTC, they still have an advantage. And they're charging higher fees than their competitors. And the reason for that is because they've got so many captive users who are unwilling to realize a capital gain just to leave them.
Mutiny Wallet will shut down at the end of 2024. The popular self-custodial Bitcoin, Lightning, and Fedimint wallet has announced that they'll cease operations at the end of the year. The decision to shut down stems from the challenges of maintaining consumer-facing applications with limited resources in a technically demanding environment. So users are going to need to switch to self-hosting if they wish to continue using the wallet, leaving the wallet's operational responsibilities to the community of self-hosters. Mutiny have said themselves that they want to focus on other projects.
It's sad to see. I think Mutiny Wallet was like a pretty innovative project in the space. They definitely pushed along with some interesting directions, especially I think they're the first wallet to integrate like an eCash, like a dual eCash Bitcoin balance. So if you had a small amount of sats that hold it in eCash for you, and once you reach a certain threshold, it would convert into Lightning, which is you could hold sovereignly. Sad to see one of their core members as well, Ben the Carmen's departed for Taproot Wizards. So he's decided to go off and work on spamming the Bitcoin blockchain. I think part of that motivation lies in some of the limitations that the Mutiny team found around the current extent of the Bitcoin protocol, and they want to investigate further improving it. But yeah, it would definitely be good to see what the rest of the Mutiny team does. I know they brought some other strong talent on board, and they're sort of taking stock of how their efforts went so far, and they're going to come back with a new project soon. On to some news from El Salvador. El Salvador is apparently going ahead with building a $1.6 billion port for Bitcoin City. So El Salvador is set to receive a substantial investment of $1.6 billion from the Turkish company Yillport to develop 2 seaports near the proposed Bitcoin City. This initiative marks the largest private investment in the country's history, and it's a significant step towards bolstering El Salvador's infrastructure and supporting its ambitious Bitcoin City project. Interesting to see that's still on the burner. It was kind of like a big announcement, and then felt like it went dark. Didn't really hear anything about that. I was happy just to let that one go. Didn't really expect to ever hear about that again, but here it is again. So I guess we'll keep our eyes on that.
And a couple of other small stories just to finish off today. Swan Bitcoin actually cancels their Pacific Bitcoin 2024 conference, and the Thailand Bitcoin conference is set for September 14th and 15th.
That's it for now. That's all the news we've got for this fortnight. We'll be back at the end of the month for some more big news. We're trying to make the show Orange Pill friendly, as we said at the start, so please get in touch with any of your feedback. Make sure you share with your friend and family if they're interested in tracking some of the Bitcoin news. And if you're looking for a Bitcoin only exchange, make sure you check out hardblock.com.au. Thanks very much, Pat. We'll talk to everyone later.